up, traders? Welcome to my YouTube channel. So in today's lesson, I'll be talking about time frame. To me, this is the most important aspect of trading. I don't know what anyone will have to say. I don't know what they think, but to me, after all, the journey is personal. Everybody has their own experience and they're exploring. Okay, so but for me, time frame, understanding time frame is the key. Because if you don't understand time frame, what I come in the chat to do, you'll be coming at the wrong time. You will not have a very, very precise entry. You will not have a consistent approach because you have not defined your time frame approach. All right. So first of all, you want to ask yourself, what kind of a trader am I? What kind of style am I using? What kind of trade am I taking? Am I an intraday trader, which means day trading? Am I a swing trader? Am I a scalper? Am I a position trader? So once you first defined your kind of trading style, you can now say, okay, this is the time frame that best suits you. So first of all, you can still have this here. First of all, you want to understand what kind of a trader are you. Number one, what kind, okay, of a trader are you? Okay, what kind of a trader are you? That's number one. Number two, let me make this a bit bolder. Good. So number two, what time frame do you want to be using? What time frame suits you? What time frame will you choose as regards to what you want to look at? Okay, so we have the monthly, the monthly, weekly, daily, 4 hour, 1 hour. I think we have the 30 minutes, 15 minutes, 5 minutes, 1 minute, 8 hours. You can see the time frame are just all over the place, but you must then cut down to what you are looking for if you want to be profitable. All right, so first thing you want to do is, after you define what kind of a trader are you, then you want to check what time frame you want to look at. Okay, sorry. Okay, so you want to check what time frame you should look at. Okay, you should pay attention. Let me say attention because it all requires attention. Okay, attention to. Okay, what time frame you should, what time frame you pay attention to. Let me take this off, that was wrong. What time frame you pay attention to. Okay, what time frame you pay attention to. What time frame you pay attention to. Very key, very key. So if you are a swing trader, now when you say what kind of a trader are you, now you've defined what you're doing. You said, okay, fine, I'm a swing trader, I'm an intraday trader, I'm a scalper. Now what you want to choose next is what time frame you should be looking at. What time frame are you paying attention to? So for a swing trader, you want to also look at the monthly first to see the overall direction of the market. You want to look at the weekly to spot key levels and turning points of the market, and on the daily you want to spot for setup and your minor support and resistance. Then on the 4 hours where you execute. Okay, am I making sense? For a swing trader, for a day trader, it could vary. It could be looking at the daily, the 4 hour, 1 hour, 15 minutes, or the 4 hour, 1 hour, 15 minutes, or 4 hour, 30 minutes, 5 minutes, like that. I'm a swing trader, so I could only speak more from my experience. Okay, so now having defined what kind of a trader are you, then what do you want to do with each of these time frames? What to do? Okay, what to do with each time frame you've chosen. That was okay. All right. Okay, so what kind of a trader are you? What kind of a trader are you? What time frame you pay attention to what to do with each time frame you chose. Which time frame you choose? Whichever one. Okay, but you get the point of what I'm trying to say. Okay, what time frame you choose? All right. So now let's say you choose the weekly, you choose the monthly, daily, 4 hour. So I'm assuming already you're a swing trader. Okay, so for a swing trader, that would be the concern, higher time frame. For a day trader, we'll go more lower, probably incorporate the daily, 4 hour, 1 hour, 15 minutes, or 4 hour, 1 hour, 15 minutes, just quick intraday move. Okay, so if you are not a swing trader now, if you've chosen the monthly, weekly, daily, 4 hour, now what do you want to do with each of these time frame? So for example, as a swing trader, I have what I call my directional bias. Directional bias. Bias. That's spelling. Okay. Directional bias. Okay. I have what I call the setup time frame. And I have what I call my entry time frame. So this is where I still manage my position. So these are the three key things for me. Very simple, precise. It has to be simple so that you can always rinse and repeat. It should be a process that you repeat. You will not come the next day and you miss one step. You understand? You will not come and you miss one step and you are in trouble. Okay, so you don't have to do that. Okay, it's making sense, right? Nice. So now we have directional bias, we have the setup time frame and entry time frame. Oh, this guy right here is entry. I'm missing the E. Okay. Yeah, so there we go. Alright. So now we have the what. So what this will mean is this. For this directional bias, I'll put what I call the weekly. Okay, so I'll put the weekly. Oh, sorry, I didn't go. Oh, internet, what's up? This is looking bad. I will go straight my hand over. I guess that's good. So right here now, I'll put the weekly. Here for me to be weekly. What's that? Okay. Weekly. The next one will be the daily, which is my setup. So setup. Okay. Now this will be my entry. Oh, this is supposed to be the daily. Oh, it's an error. Daily. So this will be okay. So this will be my 4 hour. Okay, didn't pick. So this will be my 4 hour. So you get the point now. So this is all you need for, understanding time frame. So what you are looking for every time you come. So what is your directional bias? What's the setup like? And what's your entry criteria like? Simple. And you come and you rinse and you repeat. You rinse and you repeat. That's all about time frame analysis. Okay. So, but in another video, we'll dive deep into how to mark key levels from the weekly, because the weekly now is my overall direction. Okay. So let me quickly take you to my chart and let's do some practical example now. So right now you can see this is the weekly. This is the weekly. It's very bullish, very bullish. So let's assume that I came into the market. I came into the market right here. Okay, good. So I came into the market right here. I've been able to cut that piece. So I came into the market right here when the market was here. And I could see this long engulfing candle coming from the weekly. This shows me 5 days of bulls taking control of the market. So we want to signal that out also. Sorry. I want to mark that side out. This very candle. Let me see if I will mark it out. Nice. So let's go to the daily for the setup. Okay, so you could see 5 days of pure movement. This is 1, 2, 3, 4, 5 before I started pulling back. Okay, so this is the setup now. You see that bulls are taking over. We broke this resistance. We've climbed on top of it, and this is the pullback. So all you needed to do was wait for this level to be retested right here, and you look for long. Now you can't be looking for that long on the weekly. So now, since you've known that this previous week was bullish, all you need to do is pay attention to the 4 hour. And what you want to do is what I call market structure. I made a video on market structure. Just go back and watch it, okay? So what you want to do is come back here, come to the daily, and wait for the market to come right inside of your zone. Once they come right inside of your zone, that's when you'll be warming up to take your buy. Okay, so let's see what later happened. Let's play and see. Okay, you could see the market actually came to this zone, but I'm not sure if they're going to allow me to replay on 4 hour. Okay, you see, I need to upgrade my plan. Okay, but nonetheless, you see what I'm saying. So let me just take this off and exit this mode. So you see what I'm saying? Yeah. Okay, so now we're back to where we started from. Back to where we started from, right? So now remember here, let me take you back. So this was where I said, good, let's look for it. Let's look for it. Okay, so here is it. Here is it. This big pull up. And this was the retest we were waiting for, right? This retest right here. This was what we were waiting for. So let me still mark that one out. So, okay, good. That was the retested area. Now let's go to 4 hour. Okay, good. See the circle I made, right? So this would have been my entry if I'm to trade this. All right. Remember setup. We saw bullish previous week up. Then we waited for the retest. Now that is the tricky part right there. That you saw your directional bias bullish doesn't mean you start buying immediately. You have to take note of zone for a potential pullback where you want to buy low, so that you have a low risk and a high reward. Okay, you won't just jump in and start buying. So you saw what I did. I went on the weekly. I saw that previous bullish can be very bullish, so I came to the daily to spot where the pullback will happen, and I saw this area. I wanted it to come back into the zone, and as it came back here, all I'll be looking for my entry is my favorite candlestick. So in this case, I have this this sweet rejection here. This rejection. Okay, that would have been my entry, but I still like to wait. I would have wait for this very one. This very one. Because for me, it's more convincing. So I will just set it and bring my stop loss right below the entry candle. And then I like to target market structure. In this case, I wouldn't want to be greedy. I want to target this rejection point. Okay, which is if I measure from my entry. Oh. Okay, this is a potential 150 pips. risking like of 50 pips. Yes, 50 pips. So that's 1 to 3, and it was very sweet. So I will be riding that wave as the market progresses. I'll just be riding it. So look at here. Or possibly I would have targeted this my zone here. But sometimes I wouldn't like stay too long in the market. So I'll be targeting all the structures. First I will target the structure. As it pull back here, I would have taken another trade or use my Fibonacci to gauge this level. Okay. So in that case, what I'm trying to say is this. I would have gauged maybe if Fibonacci will give me an entry. I would have plotted Fibonacci from here up until here. I could see this my 318 level. As it comes and I see that green candle again, I'm entering for another position. Okay, that's how I'll be trading the trend, because you know why? My directional bias is bullish coming from the weekly. So I know that once that trend resumes, it has potential for moving more pips and it will keep going. So that's all about time frame, right? Like an introductory part. I don't want to make it complex, but if you understand these things I just said, you are good to go. You are good to go. So please follow the channel, like my video, subscribe, share to friends, comment. I will leave a link to my WhatsApp group. Join the group. Let's talk. Let's analyze together. Let's trade together. Let's form a community. Okay. So please, that is all for today. Do have a nice day, guys, and peace out. Thank you, guys.